Hello there, traders. Hello, fellow champions. Welcome to another video of Trading for a Living Forex Champion series. So for today's video, I'll be sharing with you guys and I'll be teaching you guys what are the different types of order execution in Forex trading. So there are a lot of confusions going on when it comes to doing order execution. So again, this is just a video in response to one of my members' request. Shout out to you, Miss Catherine. So again, thank you for this suggestion of making this video in relation to order execution. So again, without further ado, let's get straight into the presentation. Alright guys, but before that, again, I just want to promote my upcoming Forex Trading Bootcamp. This will be a 6 hours, 1 day hardcore. Well, that will be on August 23rd. So to all those who already registered, thank you guys. Thank you, fellow champions, to all your support. And see you at the bootcamp. Alright. So let's move on. What are the Forex order types? So in Forex, of course, there are a lot of different execution orders when it comes to trading, and I will be tackling today, I believe, 4 different types, and you'll be able to know what are the uses, even the pros and cons of using such order types. All right. So what are those for? Right. What are the types of orders? So first we have market orders. These are the markers. These are the market orders, also called as instant execution. Secondly, we have limit orders, stop orders, and stop loss orders. So I will be explaining in detail and of course giving you examples on the actual charts how you'll be able to apply these different types of orders. All right. So let's start with market orders. So we also call this as instant execution orders. So what is this basically? So you buy or sell at the current price or executed immediately. So these are orders that are executed immediately. So again, whenever you're doing market or instant execution orders, always take note and consider what? The spread, right? So there are times that you want to enter at a specific price, but when you do instant execution of order, you'll be able to see in your trading platform that that's that exactly the price you want to enter at that specific time, right? Because you always take into consideration the broker's spread. All right. So I will be now showing you uh, exactly, or not in live, but however, I'm just giving an example how you can do market orders or instant execution orders, right? So let's go straight to the chart, right? So what do we have here? Okay, what do we have here? So if I want to execute an order at this specific moment, at this time, right? I will be hitting an order execution at my trading platform. So that will be in this area, for example. Let's make, right, if I want to enter, for example, I'm in 3 minutes or even a minute time frame or even 5 minutes. This is just an example, guys. So if ever the price was moving up and down until this candle is closed, right? So we all know that every time frame or every candle represents a specific time frame. For this example, uh, I'm on a 5 minutes time frame, so meaning every candle represents 5 minutes. So if I want to execute an order right away, execute it immediately. So you can see that the price is moving up and down. So I want to enter at this specific price, right? So I will just be hitting on my trading platform buy or sell, all right? For example, buy, right? And then our trading platform will do instant execution. Okay, as I've said, always consider the spread. So I guess I'm not trading live as of now, but I'm just showing you guys at that specific time, I hit my buy order button and enter at that specific what price level. But there are times that if I want to enter, example, at this specific uh, how do you call this, price level, there are times that if I hit or enter the buy button, my my I can see at my trading platform that it will be at this level or even lower, depending if I'm buying or selling, right? So always consider the spread. So this red line example is my instant execution order. However, during that time I want to enter at this price. So whenever I do a instant execution order, the price that I really want to enter is not really the price that will reflected in my trading platform. Why? Because of the spread. So normally I don't do instant execution because I'm doing different or using different type of order later on that I'll be discussing as well. So that will be part of it. But in this example, I'm just showing you guys that it is very likely that if you want to enter a specific price and when you do hit an instant execution order right away, that is not exactly the price you'll be entered, right? So always consider the spread. Okay, so it's just a basic stuff when you do instant execution. You just want to enter at the right specific time, right? Right now, I want to enter or execute immediately. Just hit your buy or sell button. That would be instant execution or market order, right? So going back to the presentation, right? What is next, right? Again, market orders or instant execution. You buy or sell at the current price or execute it immediately. So that's a no-brainer. So always consider the spread, right? What's next? Limit orders, right, guys? So these are the types of orders that I normally use, and basically I'm using only limit orders. So what are limit orders? So a pending limit order is what? Is an order to buy or sell at a much better price. So what do I mean by at a much better price in this case? So again, I'll be showing you in the actual charts what are limit orders and how can I buy or sell at a much better price, right? So these limit orders are also called what? Pending orders, meaning pending, you already executed it in advance prior to uh, the price coming in to that specific level, right? So let's get straight to the charts and show you what are the examples of uh, limit orders, right? Again, we only have two types: limit, buy limit and sell limit, right? In this example, if I want to execute a buy limit order, a buy limit order basically means that you'll be buying what? If your current price is above, you'll be buying at the lower price, meaning you want to buy at a much discounted price, a much better price. Again, the logic: buy low, sell high, right? So if I'm going to do what, a buy limit order, meaning I should be below what, the current price, right? So in this case, example, this is my buy limit order. Let's just have a label for this buy limit order. This is my buy limit order, right? Meaning, based on my analysis, I know the price will be uh what, going back. Sorry, right? Normally, I do buy limit orders because I know the price would come to a much better price if I'm going to buy, right? Meaning a much discounted price. So, of course, you want to buy at much lower price uh, whenever you hit or whenever you're doing buy limit orders, right? So that's the logic. Always execute a buy limit order if the current price is above you. You cannot execute a buy limit order if you are above the price. So basically, I want to buy at a much better price, discounted price. So my buy limit order will always be below the current price, right? As long as it's below the current price, right here, right here, right here, right here, you are doing buy limit orders, right? I think all of the trading platforms, if you select a limit order, you cannot execute it if the your order will be above the current price. So it should always be below your current price, right? So that would be the buy limit order. So meaning I'm expecting the price to drop before the price go up, right? Goes up. So in, in contrary, if I want to do what, a sell limit order, right? Sell limit horizontal, right? Right. Sell limit, right? uh Sorry, a sell limit order, meaning uh sell limit order means at the current price what I'm expecting the price to reach a much higher price level prior to it going down, right? Again, the logic of buy low sell high. In this case, if I'm going to short this price level, I'm expecting it to reach uh, this level for the price prior for the price going down, meaning I'm selling at a much higher price, at a much better price, right? So if you're going to have a sell limit, it should be above the current price, right? So meaning you're expecting the price to temporarily what, move up prior uh prior it to be what, to rally or for the price to drop off, right? So again, if you're going to have a buy limit order, right, you're expecting the price to come down before it goes up. However, if you're going to use a sell limit order, the price or the price level or the order must be what, above the current price, right? Because you're expecting what, a much better price on your order. You're buying at a much discounted price, you're selling, sorry, buy limit. This is buy limit, right? You're buying at a much discounted price and you're selling at a much higher price. So you're anticipating the price to reach a certain level before it goes to the opposite. Okay, so if your current price is like this, place a sell limit above the current price because you know it will what, go down later on. If you're going to use a buy limit order, you're expecting the price to temporarily move down before it goes up, right? So that's the logic of using buy limit orders. You're entering at a much better price, either you're selling or you're buying. All right. So again, the cons of what, of using limit orders is that there are times that your price level that you place your order might not be hit by the price, meaning you're not be able to enter at that specific price level, or you cannot be able to involve in the trade, right? The advantage, of course, much better price. However, the cons is the price that you have marked or the level that you have placed your limit orders might not be hit, right, during that time. So again, there's always pros and cons in every order, right? So next, stop what? Stop orders. Okay. So what are stop orders? So again, this is also a type of pending order. So a pending stop order is an order to buy or sell at an anticipated continuous movement of price, either up or down. So again, just a note, one disadvantage of this is it can be executed then sudden reversal of price going against you. Remember, going against you. So it's common for you to experience false breakout. So normally when people are using stop orders, uh, they have been be caught up with what false breakout, wherein the price suddenly goes against their way or goes in a reversal. All right. So, but this is just an order wherein you anticipate the price to continuous move in direction of moving up or moving down. Right. So let's have an example at the charts. Right. So for a stop order, meaning you will anticipate what? You will anticipate the price to continuously move up or move down. So meaning this is an opposite of limit order, right? When you do buy stop, meaning I'm expecting the price to continuously what? Move up. So buy stop order, right? And this is gonna be your sell stop. Buy stop, sell stop. Meaning if I will use a buy stop order, your order must be placed above the current price. So unlike the buy limit should be below your current price. But in this case, buy stop should be above your current price, meaning you're anticipating a continuous move up. So you're like, what? You're expecting the price to what? Pass through your buy stop order, right? On the other hand, for sell stop, you're anticipating a price to continuously move down. So you're placing a sell stop order below the current price. Right? You're expecting it to continuously move down for sell stop, and you're expecting for the price to continuously move up for a buy stop order. Right? So again, this is an opposite of order execution in contrary with the buy limit. Again, buy limit is like this, right? And sell limit, right? So again, as I will recall, uh, buy limit, you're expecting the price to temporarily move down before it goes up, right? For sell limit, you're expecting the price to temporarily move up before it goes down, right? But for buy stop, you're anticipating the price to continuously move up. And for sell stop, you're anticipating for the price to continuously move down. So again, your trading platform will not allow you if you're using the wrong order types at the wrong position. All right. So that is your comparison for buy stop and sell stop orders and buy stop and limit or sell limit orders. All right. So again, this is your buy stop setup. So normally, people are using or traders are using this buy stop or sell stop, especially when they're anticipating what a high impact news, right? So they're expecting the price to what have a huge move going up or going down. So what they do is they're doing a hedging positions. So simultaneous orders, buy stop and sell stop, because they really don't know if it is going up or if it is going down uh, at an instant. So normally the strategy for trading news at the high impact news is what, you squeeze the price, placing buy stop and sell stop orders, and then once any of that order is hit, for example like this, you automatically close, manually close the other order. All right. So in this case, if I do sell stop, I'm anticipating the price to move down, then I will cancel this buy stop order. All right. So again, that's the use of buy stop and sell stop order. Anticipation of continuous price movement up or down. Okay. So you're like squeezing the price because you don't know where it is going, up or down continuously. So that's the logic of uh, buy stop orders. So again, as a disadvantage in that stop order, sometimes the price level you're into for stop order might go your way temporarily and then suddenly reversing in your direction. So might consider, we can consider it as what, a false breakout. So again, normally people are using, or traders are using stop orders even to a minute time frame when they what, when they are trading the news or high impact news, because they're anticipating a huge or a surge of the market price movement either up or down. All right. So always what, practice risk management. All right. Always apply risk management every time. So in order for you to what, always guard your capital or preserve your capital. So what is the last order types in forex, right? So we have a stop loss order. So we all know this. Stop loss or a pending stop loss order is an order used to limit or cut traders' losses and reduces risk exposure. Again, this is just your what? Your emergency order, wherein if the market goes against you, you'll be automatically out or automatically exiting your trade. Again, this is always to safeguard or used to cut your losses. If ever the price goes against you, you'll only be risking, or you'll only be losing the certain percentage you risk at the market. All right. So be executed, then sudden reversal of price going your way. Again, this is like your emergency stop if ever the price or goes against you, or if ever your analysis doesn't materialize. All right. So normally your stop loss is always below. For example, for a buy, right? I'm expecting the price to move up. So my stop loss will be where? Below this. So meaning, if the price move against my way, or if my analysis is wrong, and the price hit my stop loss, I'm automatically out of the market. That prevents me from what? Having uh, huge losses. All right. If ever I don't have stop loss, all right, what will happen? If ever the price move what? A huge move down, what do you expect? Of course, you might even blow your account or might have a huge loss on your capital. So meaning, stop loss order is used to what? Safeguard or preserve your, sorry, safeguard or preserve your capital and prevent you from having huge losses. So always use stop loss, guys. Regardless if uh, you're expecting the price to move uh, up again, but the logic is always cut your losses as early as possible in order for you, again, to preserve your capital. Always practice risk management. So you don't want your account to be blown every now and then. So those people who don't use stop loss, again, they are experienced traders. However, It's not a good practice. Again, if you're having a six-figure account, definitely you always have to have what? A stop loss order. So that is one emergency safety feature in order for you to preserve your capital. Again, our goal is to stay longer in the game and preserve our capital. Okay, we are not gamblers. We are disciplined traders. So every move, every order execution we make are calculated and what? Always have a reasoning behind why we take that trade or why are we uh, placing the trade in that level. So always use what? Stop loss. Right? This is it's gonna be your savior when uh, your analysis doesn't materialize or the price goes against you. So if ever you don't have stop loss, guys, imagine probably if you have stop loss, probably you losing example like $50. All right. But if you don't have stop loss, there's a possibility what uh, to have much higher what much higher or greater losses. All right, depending on your capital, you might even have negative account or even blow your account. So I'm saying so always use stop loss. Right, that is for a buy setup. For a sell setup, definitely just above. All right, so you're expecting the price to what to move down and then suddenly right again. You're expecting the price to move down. However, the price suddenly goes against you, so you're automatically out of the market. Again, this is your emergency order. So always use stop loss, right? Regardless if your strategy is scalping, day trading, or swing trading, it is a good practice or habit to place stop loss whenever you place a trade, right? So that is to protect your capital. Always practice risk management. All right. So again, just a recall. All right. Just a recall. We have four types of mark of orders in forex. So market orders or instant execution, meaning what your order is executed immediately. So always consider the spread. And then limit orders. So these are pending limit orders in order for you to buy at a much better price, a discounted price or a much higher selling price. Stop orders is an anticipation of continuous movement of price. So always watch out for false breakout whenever you do stop loss or stop orders. All right. And lastly, stop loss orders. So this is used to cut your losses, guys, and reduce much higher risk or exposure in the market. So this is linked to your risk management. So whenever you place a trade, you should always identify how much is your percentage risk and how much is the money you can afford to lose if ever the market goes against you. That's why always use stop loss. All right. So that will be it for today's video. And I hope you have learned a lot. You have learned what are the different types of market orders in Forex. And again, use it to your advantage, right? Always know the advantages and disadvantages of everything. So there's no perfect tool or system. As long as you know what you're doing, you'll be able to uh, capitalize every move in the market. So this is just a simple explanation and simple logical way on how to use and apply different order types in forex trading. All right, guys. So again, for all those who are interested in joining or uh, joining the bootcamp, forex trading bootcamp. All right, so August 23rd. August 23rd is the actual trading bootcamp, forex trading bootcamp. 6 hours hardcore You'll be able to learn a lot of concepts as well as the specific eagle eye trading strategy. So this is already the second batch of this Forex Trading Bootcamp, and see you guys to all those who already registered. Thank you, thank you, thank you. All right. So that will be it for today. Again, thank you, fellow champions. Thank you to all my VIP students and non-VIP students. So see you again to our next episode.